Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Thanks for joining me today. As always, glad you are here. Today we're going to talk about how to read a fund report. We're going to talk about understanding key investment metrics on a fund report. This is a fun one. I shouldn't say fun because it's actually pretty dry, but it was asked by a client. I love podcast episodes that are the result of client questions. A client emailed me and said, "Hey, there's these numbers on these fund reports I get. What do they mean?" And I thought, wow, what a great topic for a podcast episode. So we're going to go ahead and go through that today. So investing in mutual funds and ETFs. ETFs stand for exchange traded funds. These can be a really good way to diversify your portfolio. This is typically what I use mutual funds and actually primarily ETFs. Broad diversification is the goal. And that's what we typically use, what I typically use and most advisors use in their accounts and client accounts. And so these fund reports contain a lot of information about a fund's performance, their strategy, costs, etc. But they can be a little bit overwhelming if you're not familiar with the terminology. So we're going to walk through the fund report and some of the key metrics really mean in that fund report and help you kind of decipher those terms, those numbers. So first of all, why does the fund report matter? Fund reports provide transparency into how a fund is managed and its overall performance. So investors use these reports to evaluate whether a fund aligns with their investment goals, their risk tolerance, their expectations. And typically a fund report includes information about the fund's investment strategy and its objectives, performance data, costs and fees, portfolio composition, risk analysis, and other things. And so by learning how to interpret the information, you can make better decisions about which funds to invest in and how to potentially adjust your portfolio over time and just kind of what this stuff means. So we're not going to cover all the terms. We're going to cover just a few key things that a lot of people ask about. And we're going to start with net assets. So net assets is one of the key metrics on a fund report that you'll see. And the net assets represents the total value of all the investments held by the fund minus any liabilities. So the figure is often presented in thousands, which means that a value of 6,939,704 actually represents 6.94 billion in assets under management. So just watch out for the terminology and see if they represent it in thousands. So why does this matter? Why do you care about this number? A larger net asset number generally indicates a well-established fund with a lot of investor confidence. A large amount of assets or large number of assets in the fund means it's a big fund and there's a lot of confidence behind it. A larger fund might also have a lower expense ratio, which means it's lower cost due to economies of scale. Not always, but sometimes. Smaller funds, by contrast, might offer niche investment opportunities, but that can also make them more volatile sometimes and more specialized. So anyway, the net assets is just the amount of money in the fund. All right, next, number of holdings. The number of holdings figure indicates how many individual securities like stocks or bonds the fund owns. So for example, if a report shows 4,173 holdings, that means the fund is highly diversified across thousands of investments. That means it has 4,173 different holdings inside the fund. So why does that matter? Well, a higher number of holdings equals greater diversification, which reduces individual stock risk. Also, a lower number of holdings, by contrast, can be more concentrated. That can lead to higher return sometimes if you happen to get some winners in there, but also greater risk because it's less diversification. So the number of holdings kind of tells you how diversified that fund is and how many different individual securities, which are stocks or bonds, are held inside that fund. So a fund with thousands of holdings is typically going to be your index funds or broad market ETFs designed to track an entire sector or designed to track an index typically. All right, next, let's talk about net advisory fees. Net advisory fees are the costs paid to the fund's management company for managing the portfolio. Again, the fees are usually expressed in thousands. So if it says, for example, 11,875, that means the fund paid 11.88 million in advisory fees. So again, watch out for that legend that tells you if it's in thousands in that notation. So why does this matter? Fund managers charge advisory fees for managing investments. Lower fees mean more of your investment stays in the fund and therefore in your investment. Actively managed funds usually have higher fees, while passive index funds have lower fees. So you can kind of watch out for that as well. And fees can impact long-term returns. So you want to make sure you compare them across similar funds and just be aware of what fees you're paying in the fund. All right, let's also talk about portfolio turnover rate. This is a key metric you might see. Portfolio turnover rate represents how frequently the fund buys and sells securities within a given period, which is typically a year. So for example, if a fund has a turnover rate of 11%, that means that only 11% of its holdings were replaced in the past year. So why does this matter? A high turnover rate, which can be sometimes 50% or more, indicates frequent trading, which can result in higher transaction costs and potential tax consequences. A low turnover rate, low would be maybe less than 20%, suggests a buy and hold strategy, and that can help minimize costs and tax liabilities. Actively managed funds tend to have higher turnover rate, while index funds typically have a lower turnover rate. So turnover rate is especially important when it comes to taxes, because if you have a fund inside of a taxable brokerage account and it's a mutual fund, for example, with high turnover, that buying and selling can lead to capital gains, which could cause a higher tax burden for you. So you want to be sure you're intentional about where you place the funds and be aware of the turnover rates as well. All right, those are kind of the main things that we're asked about, or that typically get asked about by my clients. But there's some other things to be aware of. There's things like portfolio summary. This details how the fund has performed over different periods of time, like 1 year, 5 year, 10 years. And you want to look for consistency in performance rather than short-term gains. Also, the expense ratio. This is the overall expense of the fund. This includes advisory fees, administrative costs, operational expenses, etc. A lower expense ratio, all things being equal, is preferable. You want to look for a lower expense ratio if possible. However, cost is not everything. It's perfectly reasonable to accept a higher expense ratio if the fund meets other specific needs you have, for example, ESG alignment or high impact. So, be aware of the expense, but it's not everything. Also, sector and asset allocation. This section shows how the fund's assets are distributed across various industries and asset classes like stocks, bonds, and real estate. Also, you might see top holdings. This is a list of the largest individual investments within the fund, often showing the top 10 holdings, and that can give you insight into where the fund is heavily invested. So ultimately, understanding the fund report can help you make a more informed investment decision. You want to familiarize yourself with those key terms like net assets, number of holdings, net advisory fees, portfolio turnover, expense ratio, etc. And all those things can help you understand the fund better. And by knowing what those key metrics mean, you can be more informed about what you're investing in. So, when you're reviewing a fund report, you might ask questions like, does this fund fit my risk tolerance? Are the fees reasonable compared to similar funds? Is the portfolio well diversified? How often does the fund trade its holdings? So again, by taking the time to understand those metrics, you can be more informed and at the very least, understand exactly what you're investing in and what the key characteristics of that fund are. All right. So again, I love topics that come from client questions. So keep them coming. And I would love to hear from you. You can always reach out to me at my website, which is elevationfinancial.com. You can reach out to me through my contact form. You can book a meeting if you want to consider becoming a client. That's a free consultation. You can find me pretty much everywhere on social media as well. Always happy to chat. All right. With that, thanks for joining me today. Have a great day. We will see you next time.